Welcome back. I'm Dagen McDowell in for Maria Bartiromo. It is Friday, September the 1st, and we are about 2 minutes away from the August jobs report. Economists are expecting 180,000 jobs added in the month of August. The unemployment rate holding steady at 4.3%. Let's check in on your futures really quickly. 64-point gain on the Dow futures. That's important to watch because, again, if this job market is too hot, is it going to cause concerns about the Federal Reserve? John Hilsenrath, really quickly, you don't see that happening because inflation is so low, even if we get, say, a print on this jobs number north of 200,000 for the month.
Yeah, the Fed is meeting in about 3 weeks, and they're going to start winding down their balance sheet, but they're not looking to raise interest rates again until December. And right now, the conversation inside the Fed is maybe hold off because inflation is so low. So I don't see a very strong number today changing that at all.
And Scott Martin, you were talking about wages, but again, this is, as Mike Block was talking about, a structural issue that's been going on for a long period of time.
Yeah, and I don't know if a few good job numbers, Dagen, are going to fix that. But I'll tell you what's interesting. The Fed does want to get one more interest rate hike in here, and maybe it is December, as John pointed out. But the data recently in the economy, we saw GDP recently at 3%. The data's starting to get a little better. So if that data continues to progress to the upside, I think the Fed is definitely on the table for the end of the year. And that'll probably affect stocks to some degree because stocks obviously love this low interest rate environment.
Oh, they do indeed. So the NASDAQ closed yesterday at an all-time high. Here are a couple of things that I'm watching for. The labor participation rate. We want to see more people. Again, this is a long-term structural problem in the labor force. 62.9% is what it was in the month of July. We'll be watching that number closely. And of course, U6, people who only have part-time work, who want more employment, that number is still at 8.6%. So the August jobs report, 180,000 is the expectation. 4.3% unemployment rate. We're going to go to Washington in a matter of seconds, but we're also watching this this wage number, which is of critical importance. To Blake Berman, right now, down in D.C. Blake.
156,000 jobs created in August, Dagen, 156,000. And with that, the unemployment rate slightly ticked up to 4.4%. Both of those were misses. As you just noted, the estimates were at 180,000 and 4.3%. June and July jobs numbers were also revised downwards. July revised down 20,000 jobs to 189,000. June revised down 21,000 jobs to 210,000. So that was a revision of 41,000 down over the last 2 months. And with that, the 3-month average for August, June, and July is at 185,000 jobs. The average hourly work week also ticked downwards slightly, 0.1 hours to 34.4 hours, and the average hourly earnings were up just a fraction, only 0.1%, bringing the yearly total to 2.5%. Average hourly earnings now, by the way, at $26.39. As for the labor force participation rate, that stayed the same as last month at 62.9%, and the U6 also stayed the same as last month at 8.6%. Jobs that gained: manufacturing saw a big boost at 36,000 jobs. Construction, 28,000 jobs. Also, mining continued its upward trend at plus 7,000 jobs. As for job losses, there was a pareback last month in government jobs, 9,000 in August, 13,000 the month before that, so a total of 22,000 jobs over the last 2 months. By the way, Dagen, I should note, the Labor Department notes, and I quote here, they say Hurricane Harvey had no discernible effect of the employment and unemployment data for August. Bottom line here, 156,000 jobs created in August. The unemployment rate ticks up slightly to 4.4%, Dagen.
Really quickly, Blake, can you talk about retail? Can you look at retail at all? And then the services sector as well. I'm curious about those two industries.
Yeah, I had just looked, give me a second here. I was pouring through that. I don't have it.
Okay.
Don't
mean to put you on the spot there, Blake.
Yeah, no, sorry. It was something I was looking for, but don't have it on the top of my fingertips
no
here.
Worries,
I'll
my friend. No worries. I don't mean to. Great reporting as always.
No worries.
But Blake
Thanks.
Berman for us down at the Labor Department. The services industry, broadly speaking, up 95,000. This is a disappointment. Phil, I want to go to you first. What do you? Because you were expecting something way north of 200,000 here.
Let's put this in perspective. Our model is showing 225K. What we told you at the beginning of the show is that August is the quirkiest month of the year. This month, August, misses by an average of 45,000 per on the flash, and then gets revised up by 65K over the course of the next month. I'm willing to say that when we get to November 3rd or whenever that October report is, this number is going to be north of 200K.
John Hilsenrath, to put it in perspective, because we've become accustomed to this 200,000 number, that 156,000 versus an estimate of 180 isn't that big of a disappointment.
No, I mean it's a tiny miss in an economy that employs north of 150 million people, and I just want to echo what Phil just said. You know, these numbers, there's something about the August payroll numbers that tend to be quirky, and they tend to miss on the downside. So I'm not at all disturbed by 150,000 number. The 3-month average, as Blake just reported, is 185,000. That is exactly what it's been for going back into 2015. So this economy is still growing at a decent pace, and it's still producing jobs at a decent pace. And a 4.4% unemployment rate is still a pretty low unemployment rate. So I don't find these numbers to be disturbing at all.
Scott Martin, we're looking at the stock futures right now, 65-point gain on the Dow futures, heading up just ever so slightly, but really holding in there, really hanging steady. So certainly stock investors heading into a long holiday weekend, I might add, not disappointed with this number.
No, I think there's something for everybody in this number, Dagan, and it doesn't change things that much. You know, it was pointed out that the moving average, the 3-month, is just about where it's been for the last couple of years, and therefore, with wage growth still pretty stagnant, it's up a little bit, but, you know, it's still pretty stagnant. It's not a threat to inflation just yet. You've got the market that can kind of hang in here and be confident that interest rates are going to stay low and stock prices can continue to be boosted. I'll tell you one thing that's interesting, though. We've seen GDP start to tick up potentially, 3%, maybe a little bit higher in Q3 or Q4. How does that translate in the job market? Because, you know, we've had these job numbers around 200,000 or so. Does that a GDP number, does that take it to, say, 225,000, 250? That's a question that we got to ask, which probably will boost stocks towards the end of the year.
Mike Blunt.
Yeah, you know, the macro picture hasn't changed here, but what may have changed in these numbers is the markets picture. Now, right to the left of my head over here, you see the S&P futures up 7.25. They're making highs here. They're 11 handles away from the all-time high. What's going on here is the numbers are a little disappointing, but they're not out of line here. Call it wonkiness, as Phil and John pointed out. The wage number is disappointing. I'm not surprised because it comes down to productivity. That's a work in progress and has been for years, and they better get going on that. But in any event, there was a lot of negativity in the trading community. This number's out of the way now. And yesterday, the futures markets were putting about 1/3 chance on the Fed raising rates in December. We can debate whether that's a good idea or not, but the point is this data will get that number probably down into the high 20s. I haven't looked at what the futures are doing in the Fed funds market or the Eurodollar market, but the point is it's less likely the Fed's going to get aggressive here. People like the status quo. They like the cheap money. That's how deals get done. Private equity gets to work. For markets, this is going to be taken very well. We'll see what the bond market does with this as well. A little disappointing. Should rally the bond market. And, oh, by the way, the fast macro money has been short treasuries here. So we could see a situation where there's upward pressure, not just on stocks, but also on treasuries.
The yield on the 10-year is down ever so slightly.
There it is.
2.11%, 2.11%, which is still incredibly low, Mike Block. I want to get into some of these sectors just to bring people up to date on them, Deirdre. Again, you have a manufacturing industry in this country that is really recovering and firing. Look at that. 36,000 jobs were added just in the manufacturing sector in the last month. Retail, still hard hit. Retail, back to school season, we had 800,000 jobs added there. But 28,000 jobs is added in construction. So that goes to the real demand out there for homes.
This is a nice hold steady number, right? Overall, we're seeing that in the market reaction. And then as you're going through, Dagan, just sector by sector, I mean, manufacturing is one of the areas, construction, where people have wanted to see strength, and government jobs cut, which is at least what this administration administration has been talking about doing, right? Kind of making government a little bit more efficient and bringing the private sector, giving some support to the private sector as well. I love that idea of focusing on the labor force participation rate that you signaled, because that is key even when you look at the retail sector, right? Because there were a lot of people who could not get jobs that they wanted, along with that U6, who were working in retail. So that's why that retail number is so interesting as well.
Yeah, just 800 jobs added there in retail as it continues to struggle. And just to reiterate that the revisions to June and July, it reduced the job growth combined in those 2 months by 41,000. But Rachel, you're on the ground you are really connected to your community, connected to Washington. Just what do you make of this number? It still is. It's a labor market that's growing. It's a labor market that's healthy. And again, manufacturing really coming back here.
Manufacturing, mining, construction. I could feel this on the ground that, these markets are tight where I live. And I'll say again, manufacturing, these are jobs that Democrats were trying to tell us were gone forever. And they're back, and it's roaring, and it's making America great again. And we're seeing government jobs decline. This is precisely what the American people voted for. These are exciting numbers, but again, we could feel this on the ground in Wisconsin and in the upper Midwest.
John Hilsenrath, is something I raised with Rachel earlier, because we talk so much, and you're down in Washington, so talk so much about the pro-growth agenda, and we haven't seen anything come out of Congress yet. The fixing Obamacare didn't happen, but with this tax reform plan, because the economy is doing well, because it is healthy, does that give those people down there in D.C. a pass on really pushing ahead something that could help the economy grow even more?
Maybe it takes some pressure off of them, but the fact is that President Trump and Republicans have promised so much that I think there's a lot of pressure on them to deliver. If they get to the end of this year and there's nothing to show for controlling Congress and controlling the White House, then I think that puts them in a tough position going into elections in 2018. So I do think that the people that we talk to very clearly recognize they have to deliver something on taxes. I don't think they're going to be able to deliver everything they promised, but they have to get a headline out of that.
Scott Martin, do we need that to keep these kinds of job numbers coming? Again, I know that this was a miss. It was 156,000 jobs. That was below the expectation of 180. But John raised this. The 3-month average is 185,000. That goes back to where it was in 2015.
Yeah, I think, Dagen, you're going to need.
We lost Scott's shot. We're going to get it back because we do want to hear from Scott. But Phil, you can answer that question. You're not concerned at all about this, as you were pointing out the past anomalies.
I'm not concerned about this at all, because look at all of the other data points. Right? Rachel talked about what's going on the ground, that we've got manufacturing's perking up, back to school season's running very strong, the GDP number revised up to 3%. We know because of the weak dollar that exports have been very strong. All of the data points are inconsistent with the number that this missed. Now, why did this number miss? What typically happens in August, the BLS, a lot of their staffers take vacation. Autos, industry, the auto industry takes downtime. They furlough their workers to retool plants. Teachers going back to work. Students who have part-time jobs quit their jobs to go back to school. All of that quirk results in this number. All of this will get washed out by November. This number will be north of 200,000 in 2 months. But today the market's a little freaked out because they think this number is a sloppy number. It's not a sloppy number. It's a quirky number based upon the way the system is constructed.
And I am keeping a close eye on President Trump's Twitter feed. President Trump, we know the networks you watch, so this is a pretty good number. Manufacturing up 36,000, construction up 28,000, service producing industries, 95,000 jobs added in that sector. Lori Rothman is at the New York Stock Exchange watching the reaction. Lori, what do you see?
Ho-hum, Dagen. That's really the reaction here to this August jobs number. A little bit of a disappointment. One trader points out the average work week, as you've been reporting, coming in lower. Big disappointment there. Plus, missing the August number, including downward revisions prior 2 months. So all in all, really not all that much to get excited about, especially if you look at the Treasury market, seeing a bid in Treasuries this morning. So even though U.S. stock index futures are holding up, not a lot of change there. We are seeing some action in the bond market this morning, which suggests interest rates will stay low for a longer time. So another way perhaps to interpret this is that it's a Goldilocks number. It's showing job growth, but not so much that we're going to see an uptick. It's not too hot. You know, inflation, too, has been rather tame. And so it means we're not in a situation where we're going to see a tightening situation from the Federal Reserve all that soon. I'll send it back to you.
Thank you so much, Lori Rothman. We were focusing on the labor participation rate. It was at 63%. It got as high as 63% earlier this year in February, but this is something, Deirdre, that John Hilsenrath has talked about a lot, is that this is a structural issue of you have had so many people who might have just left the workforce.
There are a lot of people, and you know, we've been looking at some of these big manufacturing. I know in Detroit, for example, there are a lot of people who are trying to retool themselves. Let's say they were an engineer for one of the big three. They are teaching themselves to code. They are programming. So there are structural shifts that are happening as far as demand goes. That being said, I do think it is cheering to see this manufacturing component up, and then in the meantime to have a hold steady all across the board, but particularly with that labor force participation number, because it has been worse in the past, right? So this is actually a nice hold steady that at least people who are looking for a job are able to find something, right?
John, I know that we watched the number of job openings, and that number has continued to rise. It's at a record. It's north of 6 million job openings that are out there. What's going to need to happen for these companies to find workers to meet their needs in the coming months and even years?
Well, you know, that's one of the things that's puzzling about this economy right now, because on the one hand, we talk about all this slack and about all these part-time workers who want full-time work and people who dropped out of the labor force. But we also hear from a lot of the companies that we talk to that they're having a very hard time finding skilled workers, finding people who have the education and the training that they need to fill positions. And as a result, there are a lot of openings that aren't getting filled. You know, I think some of this has to do with the demographic change that you were just talking about. A lot of older workers, baby boomers who are retiring, and younger people coming into the system has just left a lot of empty pockets in this economy that need to get filled.
Scott Martin, we've gotten the gremlins out of your shot. You're back with us. What say you?
Well, it's interesting, Dagen, because to me, the main player in this whole thing is the Federal Reserve. And if you look at the jobs numbers today, you look at wage growth, it keeps the Fed, I believe, still on the sidelines. But there's probably going to be one more interest rate hike by the end of the year. But after that, there may not be one. So if you look at where the market is focusing on borrowing costs, on low interest rates, keeping interest rates low here by not overheating the economy is going to be big. And wage growth at 2.5% is not going to do that.
Scott, that'll be the final word. For now, don't go anywhere. More on the August jobs report after the break.